Good morning, everyone. We'll learn again about something extra about mutual fund. So, welcome back on financial services classes. Today, we'll go for the types of mutual fund. Last class also we have gone for types of mutual fund. And last class we have seen according to the ownership and according to your operation of scheme. Today we will try to learn about the according to portfolio. Okay, these can be your open-ended, these can be your close-ended. Okay, now under that, very first we'll try to check money market funds. Okay, so as the name itself suggests that we used to go for money market instruments. Okay, so that's why we can say that these funds which invest in short-term fixed income securities like government bonds, treasury bills, bank acceptance, commercial papers and certificate of deposit. Okay, and they are generally a safer investment. Fine, safer mode, risk level is low, but same time lower potential return than other type of mutual fund. Risk level is also low and return will be also a little bit lower compared to the other funds. Okay, so this is your money market fund. Now the next we have to check equity funds. Okay, so these funds invest in stocks. Okay, and their aim used to grow fast than your money market funds, and generally or usually we can say they used to have the higher risk. Okay, compare for losing your money, but still they are having a good history that they used to give you the better returns. Okay, and for investing in equity funds, options are available. Different types of equity funds are available, which may include from a specialized in growth stock or maybe from value stock or maybe combination of these or maybe income funds. Okay, so combination of these you can select. Risk level will be high, but same time keep remember you will have the higher chance to get higher return also. Okay, next in this we'll go balanced fund. Okay, so these funds which invest in mix of equities and fixed income securities. So you can say the combination. They try to make a balance between the higher and lower level of risk, or you can say that high returns and fixed, not fixed but kind of lower but okay less risk returns. Okay, so they just try to go for the mix of equities and fixed income securities because they try to balance, okay, between your higher returns against the risk of losing money. Okay, what is balance? Balancing the higher returns against the risk of losing money. Okay, they have actually the more risk compared to your fixed income funds, but less risk compared to your pure equity funds. Okay, so they generally split the money among the different types of investments to diversify the risk. Fine. Next we have index fund. So these funds aim to track the performance of specific index like Standard and Poor's, that is S&P. Okay, so any one index they are going to copy, they are going to follow, they are going to do the mimicry of that index. Okay, and the value of mutual fund will go up or down as the index goes up or down. Okay, and generally your index funds have the lower cost compared to your actively managed mutual fund, because in case of your index fund, portfolio manager doesn't have to do as much research or make as many investment decisions as they are following, or they are just copying the some index, specific index. Okay, then next we have specialty funds. Okay, so these funds focused on specialized, okay, mandates like your real estate, commodities or socially responsible investments. So they are like specialized. Okay, they invest solely in one specific sector. Okay, and even we used to call them sometimes your theme-based mutual fund also, theme-based. Okay, and these funds, specific sector they used to invest, or few stocks they used to invest, and that's why risk factor used to be little bit higher, but same time they deliver great returns also. And if we go further, your past also, there are some area like banking or IT or pharma who has witnessed a huge and constant growth in the recent past years. Okay, but the thing is, only you have to keep remember focused on specialized. Okay, then next we have fund of fund. They invest in other funds. Okay, so that is they try to make asset allocation and diversification easier for the investors. Okay, they also known as multi-manager mutual fund. Okay, they buy one fund, okay, which invest in many funds rather than investing in several diversifications. Okay, so directly they are not going to invest in any securities, they used to invest in other portfolio, okay, other mutual fund. That is your fund of fund. Next we have tax saving funds. So as you can read here also, it also known as a equity linked saving scheme, where you will have the lock-in period of 3 years, but it will provide you or offer you tax benefit as per the section 80C of Income Tax Act. Investment made in ELS funds are exempted from income tax. Okay, so you can save your some amount. Next in this list, check out, we have a liquid funds. Okay, so what are actually your liquid funds? They used to invest their pooled money in short-term financial instruments. Okay, short-term financial instrument, and it is these type of funds are now very good for parking your surplus money and earn better returns compared to your fixed deposit and saving accounts in the short term. Okay, you can earn good returns compared to your fixed deposit and saving accounts for the short term. So you can use it as your parking lot. Okay, and they used to invest in debt instrument and money market, and tenure period used to be 91 days. Okay, and maximum sum is allowed to invest is rupees 10 lakh. And for liquid funds, NAV, that is net asset value, which we have seen during your open-ended and closed-ended scheme. Okay, NAV is calculated for 365 days, including your Sunday also. Okay, next we have the growth fund. So as you can see here, what we have written, usually allocated a considerable portion in shares and growth sector. Okay, so that means they are going to invest in shares and growth sector. So it is better for those type of investors, or suitable for those type of investors who have surplus of ideal money. Okay, surplus of ideal money, or who are positive about the scheme, because risk level is little bit higher. Fine. Next we have a fixed income fund. Okay, so again, as we can see here, these funds buy investment, that is like which pay the fixed rate of return, like government bonds, investment grade corporate bonds. So they try to invest, or their aim is that money should come into the fund on regular basis, mostly through the interest that the fund is going to earn. Okay, so try to investment also on such type of securities that can give the fixed rate of return on regular basis. So these all are your, I have covered 10 types of your mutual fund types under the portfolio. You can check your Google for other types also, there are other types also available. I have just covered the tense. So just kindly go for this, and if any doubt, you can contact me. So for the day, thank you. Have a nice day.